as these fiat money currencies around the world collapse in real time, and as these central banks are now exposed as having nothing on their balance sheet but hamster poop, people are realizing that super hyper Bitcoinization is the way to fight super high hyperinflation. So that's what we're at the end game of the 300-year experiment of central banks.
We are.
Definitely.
And you've been predicting this for quite some time now.
Right, I've been predicting it for a number of years. Our show, for many years, talking about it, the kind of the inherent fraudulent models that run these big banks is come under the weight of its own fraud, and they're all collapsing. And Bitcoin was really invented as a central bank killer. Mm-hmm. So now it's Bitcoin's time.
There you have it from Max Kaiser. With that, we got another jam-packed video for you. The Bitcoin Bros is coming at you. Before we get to it, take a look at us on our link tree. You can check out our official Bitcoin Bros website, but also follow our Patreon. Our website has multiple tools you can use, quite a few ebooks that we've made just for you. Technical Analysis 101 if you want to sharpen up on them TA skills, and also Getting Started with Bitcoin and Cryptocurrency Ultimate Beginner's Guide. This is also on Amazon. Check the link below, but also just search Bitcoin Bros on Amazon. You'll see the books there. Also, we have another course. We have a course that we created for you, 9+ hours of alpha that's just jam-packed into getting started into crypto. Marked down right now, $39.99. Limited time, so go ahead and check it out. Getting straight into it, take a look at the Bitcoin price chart. Current time is recording, Bitcoin's coming in right below 70,000 at 69.2K. And we've analyzed this chart and looked at it time and time again. The momentum oscillator, stochastic RSI, is moving to the upside, and we still see just bullish consolidation just over previous resistance of the 2021 peak back here in April of 2021. Now, how long will this consolidation last? What will Bitcoin do? How fast will Bitcoin move? Are we going to see another leg to the upside? When is 100K coming? We've showed you this Elliott wave sequence, 1, 2, 3, the fourth leg pullback. How high will 5 go? And will the 4-year cycles be the same with the ETFs? Could this be the last chance for altcoins to rip and make some money? Stock Money Lizards is weighing in. Take a look at this chart here. He's calling for 100K in 2024 and then 200K by the end of 2025. But look at this. You may see a lot of chop. Just putting in higher highs and higher lows, higher highs, until ultimately having that peak. So what will this look like for altcoins? Will this chop allow altcoins to really take off? Will the money start to flow from Bitcoin to Ethereum, then other L1s and other ecosystems, how it has in previous cycles? Time will definitely tell. There's a lot of opportunity in the market. But before we get to any of that, taking a look at one more thing, the CBBI, 75% that we're at the peak. So look at this chart here. We see that if we zoom into here, we see that we did get in overheated territory right here around 73, and look what happens. We cooled off going back down to 58,000, but then we had that rip to the potential upside. We're sitting right at macro resistance / support, but going another leg up. Will we see another dark red dot? Then we'll have to cool off again, and will this be sort of the stair stepping that Stock Money Lizards is showing us right here before we ultimately get that blow off peak in 2025? You be the judge, but right now we haven't seen that peak just quite yet. When the red gets in, the dark red, that was the time to sell, but we haven't seen that. Will we get to 100K this year, and will we be too overheated? Raoul Paul's weighing on these macro cycles, the 4-year cycles, and he's giving you his take on what to expect in the crypto markets. Let's check out what Raoul has to say.
So this has been done before. It's the 1950s playbook. And here it is again. Debase the currency and then service the short-term debts. And it's creating this perfect cycle. But even within this cycle, it breaks down to shorter cycles. And this is where it gets bananas, which is a word you'll hear us use a few times. It's so arrogant and stupid to think that you can just simply break it down. Here's a 4-year cycle, and it breaks down to simple 4 years. But it does, and it has done since 2008. And what you've got here in this kind of overly colorful thing is, you've heard me talk about this, macro spring in green. That's when the economy starts thawing because liquidity is starting to rise. Then summer comes and liquidity starts really moving. And then fall is when you really often get a large injection of liquidity before eventually we go into winter, which is the blue, and liquidity shrinks as the central banks pull liquidity out of the market to try and cool inflation and the economy overall. And they've been doing it perfectly. These debt cycles also happen to be the US presidential election cycle. It's also the same as the Bitcoin halving cycle, because Bitcoin was 2008. So we've got one mega cycle that rules it all. It's the most powerful cycle we've ever had. And most people can't see it or don't yet understand it. And it makes them be wrong in their understanding of how everything works. And you can see it, people trying to explain things on Twitter without understanding what really moves things. But when you understand that same grid of colors, the same seasonality, understanding that each of these was an increase or decrease in liquidity, well, when you look at the NASDAQ, and we've proven how NASDAQ is correlated, NASDAQ breaks down exactly by the seasons too. NASDAQ does well in summer, which is we're in now, we're just transitioning into, but it does really well at the end of the cycle in fall. It tends to have a momentum. It's kind of a reflexive process, which really builds on itself, because in fall, earnings are at peak. So equities are driven by earnings plus the investment cycle. People have got more money to invest. So falls, that would be equate to 2025, should be really strong for tech and strong for this year too, which is summer, coming off green, which tends to be very good for spring too. So this is this exponential age tech trend that I talk about. But crypto, same cycle. This is the crypto cycle. We can call it crypto spring, crypto summer, crypto fall, crypto winter. It's the same as the election cycle. It's the same as all the thing. The presidential cycle. They're all the same. So crypto tends to do decently well in spring. The anomaly was 2020 because of the pandemic. It did very well in spring, less well in fall. Generally speaking, like the NASDAQ, fall is when the real price action starts. My guess is we'll probably be more similar to 2017, 2013, this cycle, because we're not jamming excess liquidity in early, it'll accumulate over time. But anyway, now you understand the cyclicality, why it happens, based on liquidity. You understand liquidity itself and why liquidity is there. What its job is to do is debase the currency to pay for the debt. That's making the rich get poorer, the poor get poorer. It means your wages don't go up as much as the cost of housing. It's all described within the Everything Code.
So there you have from Raoul Paul. He's giving you the 4-year cycle gameplay, and liquidity is what drives these cycles. You got to be prepared, because right now the Fed is getting ready to inject more liquidity into the system. Looking at the overall M2 money supply, zooming into this chart, what do we see? We see an uptick going into the end of Q1 of this year. This is bullish, meaning that more monetary stimulus, M2 money supply, is coming into the markets. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today. I'm out.